All right, good morning, everybody. So we had the CPI data this morning. Let's see how it came out. So core was 0 over 0.2, year over year at 2.6 over 2.8, month over month at negative 0.4 over negative 0.1, and then 3.5 over 3.8. So every single one of those readings was lower than expectations. So we did actually have a decent move back to the upside. If you guys were in Discord at the close yesterday, this is exactly what we talked about with the one directional move leading into the CPI. It is more likely that CPI reverses those one directional moves than continues them, right? So that is definitely not out of the ordinary, seeing that it's reversing that move there. And also because we have that gap, it's just giving them like a pretty easy target for that CPI. So both of those things became kind of true. The gap is a magnet, and the one directional move is being retraced. Okay, so looking at our targets for the trade plan, I think it's pretty much the same. Holding above that 568, we're going to look for 96, which is that POC level, which was hit once already, and then that 608 for the full retrace. And then if we want an extended target, we could just say the gap fill around that 625. Staying below 568, we go back into a retrace of today's value back down to 32, possibly around like 500 to 90. And I'd say today is likely going to turn into a capital B day pretty quickly. That's kind of the day shape that I would use here. Same exact story on NASDAQ here, but we are going to raise our level from that lower level to the upper level, which is around 700. And then we'll have to raise our targets. Let's say the overnight high, let's say 920-ish. And then around that gap fill, which is around, we'll say like 40. And then to the downside, we just need to raise these one level. So we'll say POC, and then we'll say 448 for the retrace. So far, this is as expected. Nothing out of the ordinary there. CPI data is much lower than expectations. So we are retracing the one directional move that was kind of like faking that it was pricing in the CPI yesterday. That is very, very common to see a one directional move into CPI, but then you see CPI retrace it. Now, one thing with CPI is you normally retrace about 50% of the move, but that's already happened. So we had a massive move up to like 614, and we've already come back down to about the halfway point of that move. So normally if it was like opening up here, we would target that move down for that 50% retracement. We can't do that because it already retraced itself. So now we just need to see if it's actually going to protect that 50% retracement, basically right around 75-ish. Okay, keep a close eye on this like 75 area because that's kind of like the halfway point. It's kind of like where the momentum started coming in on that CPI candle. They do need to protect that. If they do not, it kind of gives up the entire candle. Good morning, everybody. Good morning, AT, Future Stream, Asparagus, Banana. Good morning, Scott. Good morning, Lumir, Scott, Ray, Morris, eBay, Flory, Peter, Music. Good morning, Larry, Peter, Julio, Typhoon, Greg. Good morning, Faraj. Good morning, Think, Adam, Scott. Good morning, Panama, Fernando. Zaid, Timmer, Leslie, DMG, Devil, Vivian. Here's that VWAP. VWAP at 66. We are very far from VWAP on NQ, way back at around 600. Pulling back to that same rollover level. They really like that level at 688. Okay, you're starting to get a little bottom heavy here, building up a pretty strong node and delta below this VWAP. So keep an eye on that 66 area. They need to stay above VWAP. What's going on with IBM? Do they have earnings or something? No earnings, but they're down 25%. Let me see if I can find the headline on that. Oh, I see. Yeah, they issued a statement saying their earnings were going to miss pretty hard. The largest one-day drop in like 40 years or 50 years almost. That's a massive move for IBM. It's in that same distribution pattern as all the other kind of bubble companies. It's the first one kind of pulling back, though. Pretty strong VWAP bounce here off of, on ES. They're doing a good job protecting that VWAP. Keep an eye on this 24 EMA. They stay above that. They're going to try to trend back into that prior high, back to like 85 or so. Keep an eye on 865, back to the gap fill around 3070. Still retracing yesterday. Technically, we've already retraced it because of the CPI move. But that's just a massive news candle. For a true retrace, we need to go back to like 608. Looks like the bubble companies are doing pretty good. They're all up, and then the sector that ties to them, the production side, is up as well. Yeah, it's pretty funny. The production companies or manufacturing companies, they almost have the same exact chart as the semiconductor companies when they are very different sectors. Muted? I don't think I'm muted. Definitely not muted. Morning, Scott. Morning, Rocket, Stream, Ryder, Joan. Morning, Lucio. Single stock futures start trading Sunday night. The CME website talks about it. Gotcha. Yeah, I was hearing about that. I didn't see any headlines recently. Let me see what, how many companies it's going to have. Initial launch is 55, over, a little bit over 50 companies. Apple, Amazon, all the big boys you would expect. Obviously financially settled, so cash settled. Standard and micro sizes. It says big brokers like NinjaTrader, Interactive Brokers are promoting them a lot, so they're going to have access to them. No announcement on Robinhood or Tasty Trade if they will have access to them. It's kind of interesting. We'll see how they trade. We'll see if they have like decent liquidity and whatnot. I wonder if prop firms like Apex and like the other futures trading prop firms are going to slowly start offering them, because they're kind of technically futures. They're on the same exchange. You kind of have the same data feed, I'm guessing. Yeah, I'm not sure. We'll keep an eye on it. I think it's mostly going to be used for hedging and instead of like day trading. You'll obviously have a little bit of retail guys using it to day trade, but I think it's mostly going to be used for hedging, kind of like how you would use futures. Or sorry, options, I mean. Very low liquidity today. We're seeing a lot of level 2 orders. You can see the liquidity up here is pretty low as well. Obviously, thanks to that CPI data. Yeah, it says one big contract will be 100 shares. So essentially an option contract, basically. And a micro will be 10 shares. Standard ticks will be every penny is $1 on the regular contract. Obviously equal to 100 shares. And then micro will be 10 cents. Margin requirements, 15% of the notional value. They are treated as futures for taxes, so 60-40 long-term, short-term split. Yeah, seems pretty straightforward. Seems like a normal futures contract, basically. Just tied directly to single names instead of like indexes, which is not great for us trading ES and NASDAQ. That might pull a little bit of liquidity away from the indexes if people want to trade like individual names. It says they're going to be standard quarterly contracts, March, June, September, December. It says there is no day trade margin on them. So the 15% margin is both day trade and for holding overnight. Why trade stock options? I don't think it's going to compete too much with the options because you still have all those like strategies you can do on options, the different spreads and whatnot. Which, yes, you could do some of those spreads on futures, but not to the same degree. But I think it will definitely be a lot easier for people. It will be a lot easier for people that don't want to learn all the Greeks and all the fancy options stuff. Because as I've always said about futures compared to like the options market, the futures market is just way cleaner. It's the cleanest way you can trade stuff like this, like day trading. You don't have to learn all the options and the Greeks and the contracts and all that stuff. All the specific like jargon for the options market you don't have to learn. So if that does become more and more popular, it probably will take away from the options market a little bit. It will mostly take away from the people that are just like kind of day trading it and they're not doing all the fancy strategies. I think the people that are doing the more advanced spreads and whatnot, like the butterflies and calendar spreads and all that stuff, they're probably going to stick to the options if they're selling premium and whatnot. You can't sell premium on futures, right? No wash sale, yeah. Yeah, the wash sale point is actually a very strong point that you made. That is a really good point. That the futures, you would want to trade the futures over like the stock or the options. Yeah, they're gonna have futures trading time basically, so nearly 24/7. Another way to lose money, yeah. Monorama. Yeah, like I said, I think the people that it's targeting or it should be targeting the most on the retail side are the people that are like jumping into options that don't know what the hell they're doing. Like they don't know what the Greeks are and all the fancy terms are. They would be better off doing the futures because they're just a lot cleaner. And a lot of these names nowadays, they're so expensive that people can't just buy 100 shares of them, right? Like, look at the price of like Microsoft, like 100 shares. You see what I'm saying? Like 100 shares of that. What, Amazon? What else? Meta's probably pretty high as well. Yeah, Meta's ridiculously high. So buying 100 shares of these companies is very expensive. And then if you want to buy one of these new futures contracts, it's 15% of it. So you're saving 85%. I don't think it's going to help with the volatility, though. I think it's going to probably make the volatility a little bit higher because yet again, it's spreading out the liquidity. We just keep getting more and more ways to spread our liquidity. Now we have so many different markets that our liquidity is spread out on that we're not seeing the thick liquidity that we're used to seeing on ES and NASDAQ. It's very, very thin. Yeah, options Greeks are really not that bad. Like when you dive into them and you learn them, they're very straightforward. Realistically, you only need to know like 2 or 3 of them. You don't need to know all of them. Delta is the biggest one you need to know, and then probably Theta or Vega. Those are kind of hand in hand. You need to know those. The other ones, they help, but they're not that big for what people are doing, right? Most of the time, they're just day trading. If you're just like day trading in and out, Delta's the biggest. Theta's the second biggest. And then probably Vega. Easy way to look at Vega is like volatility. Theta is time decay, and delta is like actual price movement. That's the easiest way to look at it, really. But yeah, we'll see. Like I said, if the stock futures get more popular, there's really no reason for people to choose day trading options over that. They're going to basically slowly make the options market what it used to be, where it's just the big boys kind of playing around. Not a lot of retail action. We're just chopping around a node right now, guys. We're not really doing anything. We need to hold above 88 if we want to continue here. Good morning, Tom. Yeah, of course. Retail's always going to use stuff like this to gamble. It's not, it like starts out as gambling, obviously, but like once you get more experienced, it's not so much gambling. It's kind of like educated guesses or educated gambling, I guess you would say. Like I wouldn't really consider what I'm doing gambling. It's not really like a casino. But when you start out, it definitely feels like gambling because you just don't really know what you're doing. I think once you have like your playbook and you're really consistent, it becomes a lot more like poker than like playing blackjack, right? Or like playing roulette is a better example because blackjack is actually you can kind of systemize blackjack as well. But like roulette would be more just like random gambling. So it's like comparing roulette to poker. It's like poker, is it still gambling? Maybe a little bit, but it's not like roulette. So I think that's a good comparison between like when you start trading and when you like actually figure it out and you're kind of consistent and you have a system, you have a playbook. It's more like poker than it is like roulette. Hey Clay, good morning. Welcome to the channel. Yeah, you'll find a lot of that on my channel. There's videos going back like 5, 6, 7 years. Like a third of my subscribers are actually from one video, which is almost like 10 years old at this point, I think, that volume profile video. I think it's coming up on like, it's probably like 6 to 10 years, somewhere around there. But yeah, a lot of older videos. Obviously, a lot of newer videos. I've been pumping out videos over the last few years. Nowadays, I typically do like one big series a year. We did a big series last December, which was the Becoming an Apex Trader series. If you have not seen that one, That is the newest like series, my teaching material. And then before that is probably like the playbook videos and like the order flow series as well. You want to see him? Okay, watch VWAP here, back down to 70, and then here is that pin level on NASDAQ. Losing that, your VWAP is pretty far away, back down to 626. Still very low liquidity, pretty typical on a CPI day. We have a couple of Fed talks over the next few hours that could be helping the lack of liquidity, right? Or creating the lack of liquidity, I should say. No, I don't believe so, Chris. I don't think he's doing too much anymore. He was doing a lot more on the stock side at the time. Man, my throat is shot this week. It's like a very defined flip level here. We had a low from yesterday and then like a high from today. And then it's a low again. And there's also a couple of pivots there. So beautiful zone around like 65 to 75 that they keep fighting over. Yeah, it's just a lot that goes into it. It's not just trading. There's a lot of background stuff going on that I'm not going to talk about, obviously. Yeah, they actually really like this level. Been going back to like Thursday. Heck, you could even pull it farther than that. It's been going back pretty far here, actually. Yeah, look at that. Just keeps going. Lots of highs and lots of lows around this level. That 65 to 75 area. Is that our range POC possibly? Let's take a look. I don't think so. I think the POC is a little bit lower. Yeah, it is. POC is lower. It's a secondary POC, actually. What, Ringo? Would I consider this a bull flag in a VWAP? Not really, no. The bull flag in a VWAP was way back here. So, like, you pumped up and then you kind of came down into it. So, like, that would have been a bull flag in a VWAP, kind of, but it's really far away. But not this one. No, I haven't used any add-ons or anything like that, Dylan. I just use what's built into to Addis. Keep an eye on VWAP here. VWAP coming down to 630. We're still trying to lose that VWAP on ES down to 570. Well, it's just simply not a bull flag pattern, right? Like, it's not, you don't have that flagpole. Like a bull flag, you have a flagpole where you shoot up, you have a strong impulse, and then you pull back into it. This is not really a bull flag. You just have a lot of chop here. And you wouldn't call this a pullback. It's not really pulling back. It's completely giving up the entire move. So it's just simply not the same pattern. It just doesn't have that bull flag flagging pattern. They're still using that kind of 65 to 70 as support here. So that massive flip zone we just talked about, they are trying to hold it bullishly at least. Good morning, Michael. Little bottom heavy node here. They're trying to push down through VWAP. We'll see if they can actually stay below it. The daily VWAP's kind of hard to see because it's so choppy, but it's right up here in the middle of all the chop. I'm not sure, Dylan. I think it depends on like which ones you're talking about. There's so many indicators. I don't know all of them. But there are secondary indicators that are like an add-on. They're like provided by outside traders or outside. It's kind of like NinjaTrader, how they have an ecosystem. They're not like built into Addis. So I think those certain ones you have to pay like an extra fee to use them or something like that. I'm not sure. But I don't use any add-ons. So if it's a part of the add-ons, I'm not sure. I've only ever used whatever is built into Addis. We'll see if they can lose VWAP here. It's trying to trend downward. You're kind of just in a rotation for now, so they are rotating to that value low, somewhere around like 58. This is yesterday's value low they keep bouncing off of. Yeah, I think it was like a free trial or something like that. I saw like a pop-up when you go to turn on Addis. But I haven't tried them out, so I'm not sure. I rarely ever use that. Like even back when I was on NT, if they weren't like built into NT, I wasn't using them. I don't use like the add-on stuff. Just personal preference. I just don't like adding on a bunch of things. I think as we can see on my screen, I'm already looking at enough as well. I don't need any other stuff. I'm not seeing any headlines from those Fed talks just yet, so I don't think they've started. Okay, he's about to start. I'm not watching these, by the way. I'm not going to pull it up on stream because they're usually just political clown shows. Very little to do with like actual economics and stock market stuff. I don't pull up the Senate hearings, right? But he is doing a Senate hearing right now. I believe it might be one of his first hearings as well as the head. Okay, he's about to start. You could say that that's possibly just bots like front running the testimony starting. It's hard to say. He just started to speak. We'll see if it can stay below VWAP here. If it bounces back into it, we'll see if the sellers come in. This is finishing that rotation, or at least trying to. Yeah, there it is. Rotation finished into 57. If it stays below like 55, just watch that overnight low, which it's currently not doing. That delta is shooting up pretty fast here. A lot of delta off that value low. Okay, here's the bounce back into VWAP, but the delta is very strong, so we're not getting that seller pressure just yet. That was a very small bull div hitting the trail here. Morning, Olive. Yeah, normally we'd say we'd be looking for this on the open to retrace the CPI, but it already kind of retraced itself. So this is just a full retrace. Sometimes they do 50%, sometimes they do a full retrace. Today was just more of a full retrace. That delta is coming in very quickly here. Warsh is done speaking for his initial statement. Now he's doing questions. A little bit of sell pressure when they tried to push above the daily VWAP there. Bit more seller delta coming in on that VWAP. Failing VWAP here is a failure to rotate because they're trying to go back to 87. Or at least like 82 to 85. You're in that danger zone, stuck between the VWAPs here. And once again, you're stuck on that rollover pin damn near to the tick. I couldn't tell you, Olive. I don't like a lot of the numbers, and I don't like how we gather numbers. Um, so I think that Warsh. I said this if you guys watched Warsh's first FOMC meeting, and I went on this like long rant. I'm not going to do it again, but long story short, what I was saying was before Warsh made his statements on the first FOMC about how he wants to change how we gather all this data and he wants to kind of modernize it. Traders and people that deal with the macro data, we've been constantly bitching about how this data sucks and we don't believe it and we need to get better data, right? And then Warsh talks about how he wants to modernize how he gets the data and he wants to change how we get it and blah, blah, blah. And then people are bitching about that as well. So it's like, which one do we want, right? Do we want to change the data or do we trust the old data, right? So I'm in the world of at least give it a shot, right? I think Warsh should give it a shot and change how we gather the data to see if it's more accurate, if it's faster. Just basically, long story short, is it more modern, right? It's not being cooked as much. At least give it a shot. Why not? People don't trust the data nowadays anyway, so what's the harm in changing how we gather it? That's the way I look at it. But it just goes back to what I always say about traders. Traders always have something to bitch about and some way to complain. So I think we're screwed no matter what, is basically what I'm saying. I think even if he changes it and it does get quote unquote like better or like more accurate, not as cooked, I think we're still going to complain that it might not be accurate. It's a lose-lose situation with all this data, which is why I don't rely on it in my trading. I'm not pressing a button because of how this data comes out. I'm just waiting to see how the market reacts to it, and we trade how the market reacts to it. I don't trade based on the data. I trade how people respond to it. Yeah, I don't know a ton about Warsh. I'm not saying he's going to do a great job. I'm not saying he's the right guy for the job. I don't know a lot about the guy. I don't really care. I couldn't tell you. But I think his idea of like trying to modernize the data, I think that is the right move. And if you don't think it's the right move, not you personally, just traders in general, I think if traders don't think it's the right move, then they got to stop bitching about the data. You can't have both. You can't bitch about how bad the data is and then bitch about someone trying to fix how we gather the data. It just doesn't work. Yeah, big thing with CPI, and this goes with all the inflation numbers most of the time. You have to remember that the way the numbers are given to us, like how the data is read, it's not saying that prices are coming down. It's saying that the rate of inflation, the rate that they are being inflated and they're going up, is going down. I think they need better data points that showcase exactly what I just said. They need better data points that actually show the change in prices, not just the change in inflation. And they have a couple of pricing models. Like we have like manufacturing prices and stuff like that. But I think they need more concrete, like this is the change in price itself, not just the change in inflation. Because that confuses a lot of people. Where you see inflation coming down a lot, but then you like look at gas prices, you look at grocery prices, And it's like way higher. It's like, how the hell is it going down? It doesn't make any sense. But it is going down. It's going down a lot because they are not rapidly increasing anymore. So if you go from a market that is rapidly increasing prices to like slightly increasing prices or not increasing at all, then technically all those inflation numbers, they're going to plummet. They're going to come down a lot. And that's kind of what's happening right now. We were in an environment where prices were going up very quickly, and they're not going up very quickly anymore. They're stagnating, or they're even slightly going down. So those numbers are going to plummet. It doesn't mean they're going back to where they were. That's not how the data is read. The problem with inflation, and you guys have seen this, especially if you guys are in your 40s, 50s, 60s, whatever, if you guys are older, you guys have seen this. Prices don't go back to where they used to be, right? It's very, very difficult for prices to go back to where they were. It's much easier to slow how fast they are going up than to make them go back to where they were. It depends on why they were going up, right? Take eggs, for example. Like, eggs were skyrocketing because there was a supply issue. When the supply issue was fixed, they plummeted. They went back to where they were, even lower than where they were. Because that was fixed. The supply problem was fixed. It wasn't just like a natural inflation of egg prices. They were actually being kind of artificially, or artificial is probably not the right word, headline coming out here. Possibly to do with Warsh. But they were inflated. They came back down, is my point. And you're kind of seeing that with oil right now. Like, oil is kind of artificially being inflated because of what is happening in the Middle East. And then it came down a shit ton from the high. It came down like, what, 50% or whatever it was. So all of those inflation numbers that tie to oil, they're going to be down a ton. Because this went down 40% from the high. So all of those numbers are going to be down quite a bit, even though prices are not really down that much. That's just how those numbers work, unfortunately. I'm not sure what that headline was. I'm listening to the press conference, and they're not saying anything crazy. Yeah, I don't know what that spike was. A bit of an overreaction. It was oil price coming down. Yeah, exactly what I was just saying about oil. It's like a lot of these numbers are very heavily tied to oil. So when oil spikes, inflation looks bad. When oil comes down, inflation looks good. And it's because oil is like the lifeblood of the economy, right? It's how all this shit gets made, gets moved around, etc., etc. Yeah, hopefully like next year, like when he has these task force doing whatever they're doing and he's changing how the data's gathered and all that stuff. It's obviously going to be very slow. That's why I'm saying like next year maybe. But hopefully it's better. Hopefully we can actually rely on these numbers a bit more. The numbers have always been cooked. That's just the way of the world, unfortunately. Um, but around COVID, like kind of since COVID, they've been like really cooked. I think COVID destroyed a lot of these numbers. And we're still seeing the impact of COVID, unfortunately. Like we're still seeing the impact on inflation, the impact on um, the economy and whatnot, the supply chains, all that stuff. It was basically a recession that was not fully called a recession, right? It's almost like the recovery from '08, where it took a long time to see that full recovery. And that's kind of what the problem is. It looks like we're fully recovered on the stock market because we're getting a massive spike in the tech stocks, right? This is probably one of the worst times in recent decades where the stock market and economy are not like hand in hand, right? And that's a big thing they teach you in basically any business class or market related class. They talk about how the stock market is not the economy is not the stock market. They don't go hand in hand, but they usually follow each other. They're pretty correlated, right? But I think the last like since COVID, like I said, I think since COVID, the correlation between the economy and the stock market is pretty it's hurt. It's damaged. We are definitely seeing a lot of movement in the stock market just from like that one supply chain, the semiconductors and the tech stocks. Okay, so this spike was way overextended, pulled back, but it is respecting the ADMA. So as long as they respect those EMAs, it's trying to trend here. Yeah, Main Street, Wall Street, that sort of thing. Yeah. Yeah, Panama Landman's not bad. That's a funny show. My problem with Landman is I only like the show when what's his name is on screen. Is it Billy Bob Thornton or whatever his name is? If he's not on screen, the show kind of sucks, in my opinion. Yeah, I can't watch the trading shows. A lot of the trading shows are just really dumb. Billions started out okay. And then so did that one show on HBO, Industry, I think it was called. That one started out okay as well. They just always turn into like, they start out talking about like trading and economic stuff, but then they realize it gets boring, right? People don't care about that shit. So then it turns into a drama show. It's like how actual cowboys can't watch Yellowstone, right? They say Yellowstone was made to show what city people think about cowboys, you know what I mean? building a pretty strong node here at 90. They are still protecting those EMAs, so it's trying to rotate back downward, but it's kind of breaking that. If it holds above that 90 to like 92, they're trying to break rotation here. Yeah, I think I only watched like the first 2 seasons of Billions, and then it got kind of dumb after that. I just think that goes for like any people. Like if you're a cowboy, you can't watch Yellowstone. If you're a trader, you can't watch Billions. Like I think if you're just in that world, you can't watch those shows because it's just stupid. It's like I'm sure people in the military hate watching the military movies, right? Yeah, I really liked Suits. I don't think I finished it. I don't remember what season I got to, but I watched the first few seasons. It was pretty good. But same thing with that. It's like I bet lawyers probably can't watch shows like that. Yeah, that wasn't too bad. Keep an eye on VWAP 77 to 71. You're back into rotation as long as it stays below 92 here. Rotation is pretty wide, actually. It's about 30 points. 92 down to 60. Yeah, I haven't seen too many shows recently that were like really good. It's all like the same kind of mediocre, repeated stuff. A couple of my favorite shows on Netflix, they're all older shows. Ozark is really good. Peaky Blinders, really good. Probably a ton of shit that I'm forgetting. Last Kingdom's really good. Now, I haven't watched Dutton Ranch because I didn't really finish Yellowstone. It kind of got dumb for me, so I didn't really watch the. Oh, actually, I did watch the Yellowstone prequel. There's 2 prequels. The older one, where it's kind of like Wild West. That one is really good. The one after that, I don't like as much. I don't think it's as good. But the Wild West one is fantastic. Yeah, House of Cards wasn't bad. I didn't finish that one though. I think I only watched like season 1. I don't have a ton of time to just like sit down and binge shows like I used to. So I haven't been watching too many recently. I think that was probably the most recent show I watched was that prequel to Yellowstone. Yeah, the actress who plays Elsa and the dad are really good. Yeah, it's exactly what it is, Scruff. They have two prequels that show you how Yellowstone kind of came to be. Yeah, 83 and 23. Yep. They're not like 100% tied together. I'm not going to give you spoilers or anything, but they're not like 100% tied together, but they're for the most part tied together. Yeah, I never finished 23. I need to go back and finish it, but 83 is very, very good. Mainly because of the one dude, the dude with the really thick mustache. He's in all the old Western movies. I forgot what his name is, but he's really good. Yeah, Apple shows just don't do it for me. I think the only Apple show that I actually like is what is it called? Severance. Yeah, Sam Elliott, I think he is. Yeah. Trying to rotate here, but still bouncing off VWAP, unfortunately. There's something about Apple shows. I get like one season in, and the first season's pretty good. And then towards the end of the first season, into the second season, whatever the show is, it just starts falling off a cliff. It's like they write those shows to be one season, and then they just make up the rest of the seasons. And it's like that with every single Apple show that I watch. I don't know what it is. It's like that space one. That what's the space one on Apple? Like the Mankind one? That first season is so good. And then it just falls off a cliff like season 2. The Night Manager is good. Yeah, I watched that one. That's not Apple. That's Amazon, I believe. That one was funny because I watched the first season because I never heard of it. But I watched the first season when they were showing the second season, and then I jumped into the second season right after, and he looked way older. I was like, wow, he actually aged quite a bit from season 1 to season 2. And it's because they took like a 6+ year break or whatever it was. So it's good that I watched them together because that would have been really annoying watching the first season, then waiting like 7 years to watch the second season. Slow Horses, I haven't heard of that. Is that Amazon or is that Apple? Oh yeah, Jack Ryan's really good. I like Jack Ryan. I didn't watch the movie. I started it. Then like something came up. I forgot what it was, but I didn't finish the movie. I don't really feel like that show needed a movie. I feel like none of these series need movies. I really don't like this new thing they're doing where they're making movies to finish a show, because I don't like the Peaky Blinders movie. I don't think that was necessary. No spoilers, of course. I didn't like the Last Kingdom movie. I don't think that was necessary. And then I didn't finish the Jack Ryan movie, but the first like little bit that I saw, I didn't like it. Yeah, I've never even heard of Slow Horses. I'll have to take a look at that. Slow Horses, who's in it? Oh, it's Gary Oldman. Yeah, Gary Oldman's fantastic, so it's probably pretty good. Oh, that's been going on for a while. There's 6 seasons of that. Wow. They're still asking him questions, by the way, which is why the market's pretty flat. How's the dollar reacting to the CPI data here? The dollar's down a little bit here. Not too much. Yeah, I wanted to watch the Spider-Man one. I haven't seen that yet. I think it's cool they let you watch it in black and white, or you can watch it in color. I'll probably watch it in black and white the first time. Yeah, I don't think the movie was really necessary for Peaky Blinders. I think it ended at a decent place. I guess it was just giving people closure. Um, but yeah, I don't think it was that good. It wasn't terrible. It's probably like a 7 out of 10 or 6 out of 10. Like, it wasn't awful. I just don't personally think it was necessary. This is a failure to rotate because we are bouncing off VWAP here. They are not allowing that to rotate back down to the value low. So slightly bullish here, which you can kind of see in the delta. The delta's been doing pretty good. I think I watched Fargo. I can't remember though. That's an older show. The blue level, if you're talking about the line, that's the ADMA. If you're talking about this like weird line right here, that's the rollover gap. What's the show on HBO that everybody loves with Matthew McConaughey? The older show. I can't remember what it's called. True Detective. True Detective is fantastic. If you guys haven't seen that, I think it gets worse and worse. The first season is by far the best. Like, it's not even close. I personally like the second season. I think a lot of people don't like the second season. I don't mind it. I think season 2 is good. Season 3 and 4, not so much. I don't like those as much. They're just way slower. They're just brutally slow. Like season 1 and season 2 they're slow, but there's like, it's pretty suspenseful. There's like a lot of good pacing. 3 and 4 are like brutally slow. Like you're like falling asleep watching them. But yeah, season 1 is like some of the best television you'll see. It's probably like top 10 TV shows. I think two of the best shows, or like two of the only shows I can say that progressively got better, because it's like insanely hard to do. Almost every show gets worse. I think two shows that like objectively got better is Ozark and Peaky Blinders. I think they both got better as you watched them. Probably like Breaking Bad as well. I never finished Breaking Bad though. I only watched the first few seasons. We're basically just waiting for this hearing to be over because the market is glued to this value while this hearing is going on. Yeah, my problem with Breaking Bad is it was just like it's a depressing ass show. It's like there's like nothing happy about that show. The entire show is just depressing and it gets even more and more depressing. And then when I finally got into it, I was binging like 3 seasons. I had a lot of the later stuff spoiled because it was like really big and then people were posting videos on YouTube and people were talking about it online. And I hate spoilers, so once it got spoiled, I kind of lost my desire to finish it. Yeah, I don't mind shows where like bad stuff happens to the main characters. I actually like shows that do that. But if the entire premise of the show is like everything goes wrong and it's just negative and depressing the entire time, that's not really fun to watch for me. If you guys like depressing shows and you like anime, you can watch Cyberpunk Edge Runners on Netflix. That is a top 10 show. Fantastic show. But yeah, that one's a little depressing as well. Anthropic launching Claude for teachers, offering a free access to premium Claude features for verified K-12 educators in the US. That's pretty cool. Yeah, Altered Carbon, that's another one. That's another one that I think got worse, though I didn't like the second season as much. The first season is peak on that show. Very, very good. Yeah, I watched Boardwalk Empire way back in the day. I don't remember if I ever finished that one. Little spike here. Warsh is not speaking right now, so I'm not sure where that came from. He's still in the hearing, but he's not speaking. Is oil moving? This might be an oil headline. Yeah, it's an oil headline. Let me guess, the ceasefire is back on. And then tomorrow it's back off. And then on Thursday it's back on. I don't see the headline yet, but it's obviously related to oil. Oil's coming down. Trump said that oil production is an all-time high. That's possibly what it was. Oh yeah, he posted a really long post. I'm not going to read all of this. He posted a massive post on Truth Social and talking about Iran and oil and all that stuff. But essentially, oil's coming down, prices going up. That's all you need to know. Yeah, the Gulf would be extremely hard to blockade. the much wider body of water than the strait. And it also would not impact the countries in North America as much because we're sea to sea, right? Which some of those countries in the Middle East, they have access to other bodies of water. There's not many places on Earth that are comparable to the Strait. It is like truly one of the biggest choke points of our entire global supply chain. The most comparable would be maybe around like Taiwan, like that. I forget what they call it, but there's a massive choke point around that area as well. There's not many of those choke points around here. Yeah, Panama Canal would be one, maybe. That would also be like nearly impossible to blockade, though. That'd be a very difficult one. Yeah, the canals are choke points, but they're not like what I'm talking about is like a choke point like the Strait of Hormuz that is very easy to like mine and blockade and like prevent the flow of the global economy, right? Um there's not many places on Earth that are like that. The Strait of Hormuz is just a perfect choke point. Maybe like the Strait of Gibraltar, like maybe that area around Spain. I don't know how much traffic that one gets though, like in terms of the global supply chain. But yeah, if you're looking at like how much global supply goes through the choke point and how easy it is to blockade, how easy it is to close, basically, threaten, it's probably the number one on the list. The Strait of Hormuz, right? But yeah, nowhere really in North America. You can't really blockade North of America. You can make it harder, but you can't really blockade it. It's sea to sea, right? You just build railroads, right? Which we already have. Pipelines, railroads, you can get stuff from sea to sea without needing the actual waterways. That's the big problem in the Middle East right now when they're threatening the pipelines, right? Because they have pipelines in place that are trying to take over a lot of this supply, but they don't have the infrastructure to replace the supply that's flowing through the water with the ships, right? Yeah, there's a lot of videos that talk about like the geography of North America and how like the United States is like overpowered in the sense of like it's damn near impossible to blockade. It's damn near impossible to invade. Our geography is just it's very I guess you would say like defensible if there was like a war, right? I mean, just look at the Mississippi River Delta and all the rivers that tie to the Mississippi. Look at the Appalachian and the all our mountain ranges, right? There's also not many countries that have that geography that attach massive bodies of water together with one country, right? Obviously, Canada, like Mexico, like all these countries that are kind of in North America that go from sea to sea, but there's not many of them. Yeah, long story short, though, you're probably like, what the hell are we talking about? The reason we were bringing this up is I was just saying that the Strait is like a perfect storm. That's why it's causing such a big impact on the stock market, a big impact on the oil market, etc. Because it's just like literally the most perfect place on the planet to put a oil um a blockade or strain the oil market. Now it's bothering me. I can't think of the name of that one by Taiwan that I was thinking of. Let me see if I can look it up. Oh, it's literally just called the Taiwan Strait. I thought it had like a fancy name. It's just called the Taiwan Strait. Yeah, that sounds right too, Charlie. Let me see where that one is. That might be closer to what I was talking about. Is that the one that's like south? I think it's like what, southwest of China? Yeah, yeah, I think that one's right. I think you're right on that. Handles 25% of the global trade. Yeah, thank you. That's what I was thinking of, Charlie. They're still asking him questions, by the way. Yeah, it says 80% of China's oil goes through that strait. Keep an eye on VWAP here, back down to 580. The market's just waiting on this war sharing to be over. He's still taking questions. Yeah, you can't really openly blockade the canals though. They're like fixed structures basically. And they open up into like massive bodies of water, right? A very different battle there. Starting to get a lot more bullish on NASDAQ here, staying above the EMAs. The delta is a little weak. You're actually technically in a bear div right now. You need to see that delta start coming up on NASDAQ, or it's probably going to come back down here. Keep an eye on that. It's actually right here. So keep an eye on 865. We stay above that. You're starting to retrace Friday back to 30,000, 70, somewhere around there. Yeah, very important level here, which is why we really need to start seeing that delta come in. Oh yeah, let's take a look at the Fed probabilities here now that we have our CPI data. Okay, there was a big change actually. So keeping rates steady went from 58% to 88%. The chance for a rate hike went from 42% to 12%, completely getting rid of the chance for a hike in the July meeting. September didn't really budge that much. The chance for it to stay the same went up by about 15%. October, same thing, about 15 to 20%. Basically, across the board, the chance for rate hikes went down by about 20% because of our CPI today. Yeah, Bitcoin's got a problem. And I think the big problem is what we talked about. You don't really need Bitcoin and crypto as your high volatility asset anymore because the regular markets are already so volatile. You get your fix of volatility by just trading equities. Yeah, it's just the standard cycle. Like this, it's always funny because I've been doing this for so long, I see all the new faces that get into crypto or get into the market, and they see these cycles, and it's always the end of the world, right? Because it's their first time. It's their first cycle where they've seen it go down. It's like, imagine COVID. If that was your first time trading the market, you were like, what the hell is going on? Like, we're just absolutely nuking. Is it ever coming back? Like, is this the end of the world? And yes, that time was definitely scarier than the other pullbacks that we are typically used to. But it recovered, right? So it's always funny seeing people when they get that first cycle and they see that first cycle of the downtrend of the bear market, if you will. There's nothing really different about this cycle on Bitcoin than what it always does. The only thing that's different in my mind is, like I said, the volatility. I think the use case, the big reason for people to use crypto is definitely losing that luster. It's losing its draw to bring in traders for that volatility because you just don't really need it anymore for volatility, right? But outside of that, this is like the most standard cycle. We see this like every single time. Nothing like too out of the ordinary so far. It's not even down that much, to be honest. Like, yeah, it's down like what, 60% from the all-time high? That's not even that bad. We've had crypto cycles down 80, 90%. Like, yeah, obviously if you're talking to an older trader who's used to trading equities and used to trading the stock market and whatnot, saying something is down 60% is not that bad is hilarious to them. But it's all relative, right? Like, relative to crypto, that is, funny enough, not that bad. That is like a standard pullback. It's like how, like, what, 15% pullbacks are standard for equities? 60 to 80% is standard for crypto. Which, yes, if you're holding, that's terrible. But look at it on the other side of the coin. The other side of the coin is you get to buy 60 to 80% corrections instead of buying a 15% correction. There's two sides to it. I wouldn't agree that everyone thought that. I think people that are like, I'm not going to say dumb, but they're like misled. People that are misled on how crypto works thought that like all the institutional buy pressure was going to keep sending crypto higher and higher and higher, which it eventually probably will. But what it does is it slows it down a lot. And I've been saying this since 2018, right? I used to get into these rants with people on stream all the time. The more institutional, the more sovereign nations that get involved, the slower it's going to get. Here's that bear div, finally. Bear div giving you sell pressure on NASDAQ. They are still doing the hearing, by the way. But yeah, the more institutional, the more sovereign, you're just going to get slower and slower. And that's kind of what we're seeing on crypto. What they need to make is they need to make a, like imagine Anthropic or like OpenAI. Imagine they come out with a coin that is a crypto coin, but it's their tokens. It's what you use for their API tokens. So instead of just connecting your bank account and like using your subscription fees and whatnot, you're using crypto coins that you can trade. So your unused tokens, and this is what Facebook is doing, funny enough. Facebook isn't doing it on the crypto side, but they're doing it on the unused token side, where like you can sell back your unused tokens and get a credit and et cetera, et cetera. But imagine that on the crypto side, on the user side. If you were allocated these tokens and they had a value, and your unused tokens could be sold for money or whatever, you can get your money back, right? I don't know, something along those lines. Like I could see a company like Anthropic or like one of the AI companies doing something like that. And that would kind of bring back the Wild West of crypto, being able to trade your API tokens. Now, will that ever happen? I don't know. Just a random thought. Yeah, exactly my point. It would actually give crypto like a utility. It would give it a function. Like right now, the big argument with crypto back in the day, if you guys were trading back in like 2016 to like 2020, the biggest thing that the crypto bros were saying were like transferring money, right? It's easier to transfer money, there's less fees, it's faster, yada yada yada. That's not really the case anymore. Like I can transfer money to my friends in a couple of milliseconds. Like it's ridiculously fast, you know what I mean? It's not going to sit there waiting for days at a time. Like if I want to Cash App somebody or Venmo somebody or Zelle somebody, like it's instant. It's like literally instant. The longest it takes is me to press the button. And there's basically no fees. So it's like, okay, that was the biggest use case for crypto. Okay, so what is the problem now? What is the problem that crypto is fixing? So then the other problem is like being anonymous. If you want to move your money around, transfer your money, do all that stuff anonymously, then you have those coins that do that, like Monero and whatever, Tornado, whatever the hell it's called. So like that's a use case, I guess, if you want to hide your money a bit more for whatever reason. Most likely, probably illegal shit. But yeah, that's another reason. Other than that, it's like everything else failed. All the other crypto shit they were talking about 10 years ago, about the logistics, supply chain, and all that stuff, all that shit failed. So there's not really, outside of like illegal stuff, like kind of Silk Road type of stuff, there's not massive public use cases for it. Yeah, Swift is bad. So like Swift and like if I wanted to transfer money to you guys, like a lot of my European viewers, if I wanted to transfer money across countries, that is typically more of a problem. That's a lot slower. You're paying a lot of fees, all that stuff. So that is something you could use as a use case. Large sums of money over large areas. But the smaller, like person to person transactions and transferring money, you don't really need crypto for that anymore. I think one thing that it does well, and we're seeing this is the biggest thing that a lot of countries are investing in, are like the stable coins. and having crypto coins that are backed by actual assets. You have coins that are backed by gold. You have coins that are backed by whatever, XYZ, right? But it's like when you take the US dollar or like these other currencies, they're not heavily backed by really anything. They're just backed by what we say they're backed by. Keep an eye on VWAP here at 81. But these stable coins in crypto, they are actually backed by what they say they are, or you can check, right? You can audit them and see if they actually are. But let's just say the good ones, like the good ones that actually are. They are backed by gold assets. They're backed by dollar assets, whatever it is. So those are actually pretty useful crypto coins. You're trading dollars, but you're trading dollars that are backed by gold. Yeah, the Silk Road still kind of exists. It's just more of like dark web shit, right? Like there's still sites and all that stuff you could get drugs and illegal shit from. Like obviously that didn't go away. Probably not as accessible as it used to be, but I don't know. I'm not buying drugs offline. I couldn't tell you. Keep an eye on 75 here. But yeah, I think that's probably the biggest use case for crypto right now is unfortunately illegal activities. Still stuck in rotations here. This is that bear div I talked about on NASDAQ. Just not finding that bullish delta above that 865. Rotating back down to 700, possibly around like 580 to 600. This rotation on ES goes back down to 68. Trying to bounce off VWAP here. always funny listening to these hearings and like listening to the press conferences and hearing how many times they constantly mix up the Treasury Department and the Fed. And they always ask him questions that Powell, if you guys watched the press conferences with Powell was notorious for doing this. And Powell would constantly say, like, that's not my job. You got to talk to Treasury. You got to talk to the Treasury Secretary, right? That's their job. And you're already starting to see that with Warsh, where they keep asking him or telling him things that are more so tied to the Treasury Department than the Fed. And it's like, yeah, an everyday person, or even like traders like us, like I don't know the exact distinction between the two of them as well. But coming from people in the government, when the Treasury Department is obviously one of their arms, they should understand how to distinguish the two. Especially when asking him questions at a Senate hearing, right? Even the reporters, right? The reporters, it's quite literally their job. Keep an eye on these EMAs here. If it stays below that 24, it is trying to go back down and finish that downward rotation. You could see the bounce off VWAP here as almost a failure to rotate. So they're trying to go back into rotation because they need to finish the downward one before bouncing back up. But all right, guys, we streamed a little long today. That press conference is still going on, so be careful there. But I'm going to call it here. By the way, we're doing our new schedule for shorts this week, so no shorts during the week on Tuesday and Thursday. We're going to release all 4 shorts on the weekend. So 2 on Saturday, 2 on Sunday. So look out for that. I will be streaming tomorrow, same time as always. I'll be in Discord today for the rest of the day as well. Just keep an eye on the trade plan. There's not really anything that changed on that trade plan. I'd say the one thing that did change is we were bullish to start out the day, but it's more so just neutral kind of back and forth rotations right now. So just keep it on the D shape. Keep an eye on the rotations until we break out of these value levels, especially looking at yesterday. We are not breaking those value levels. We're just stuck inside of them. We're almost perfectly overlapping our value from today and yesterday. What we talked about on the close of yesterday, if you guys are in Discord, that has already played out. So we did retrace the afternoon break. The afternoon break has been repaired, and the one directional move has been repaired. The only thing we talked about that has not been repaired is the gap. So if it does get bullish in the afternoon, just keep an eye on that gap. We'll see if they can fill that in. The problem will be, if they do fill that in, it will most likely be an afternoon break. So then they're creating another problem by repairing the gap. But all right, guys, keep an eye on those levels. If you guys enjoy the stream, hit that like button. Be sure to subscribe. Apex is still doing a very big deal on their 5-packs. If you guys want to get any 5-packs, I think you're getting the price of like 2 accounts or 3 accounts, something like that. You can use code BREW on those. If you do use the code, just hold on to those receipts. I will get those from you at the end of the month for our monthly raffle that we always do. Same as always, if you guys need access to the indicators, just send me your most recent receipt using that code and let me know what your TradingView username is, and I'll get you added to those indicators for 60 days, and hopefully they will help you get funded. Here is that email if you guys need access, or if you need it. Here you go. Yeah, that's all I got. You guys enjoy the rest of your day. I'll see you guys tomorrow if you're in Discord. I'll see you guys there. Peace, everybody.